Good morning, traders. Welcome to the Traders Lab. I'm your host, Tom B. Can I please get a screen and audio check in YouTube and the Bookmap Discord Trader Lab community? Thanks, Marty. And how are we doing in YouTube? Assume everything's good. Well, good morning, everybody. Welcome to the Traders Lab. I'm your host, Tom B. No audio in YouTube, is that correct? Can I get a confirmation there's no audio in YouTube? Can I get a confirmation there's no audio in YouTube? It is working in YouTube. Is that right? Just want to make sure. All good? Okay, great. Thanks, everybody. Sorry for that. Welcome to the Traders Lab. It's Friday. This stream is about integrating Bookmap Orderflow tools with auction market theory using the volume profiles of chassis in the intraday developing time frame. It's based on structured trades that are available to everyone. And the idea of structured trading is to have a framework, if you will, that individual traders can reverse engineer in order to build out a trade plan. And a trade plan is really a business plan of how to operate in an environment such as this one. And this environment is very different than what most of us think it is. It is not indicators and time frames and predicting what's going to happen next. It's really an environment of what might happen next. And the word might means maybe. Take maybe a little bit further. Maybe is a probabilistic equation, if you will, not a predictive one. What might happen isn't what will happen. So if we can take the idea of what might happen, we're operating in an environment that is completely random 100% of the time. That's why it might do this and it might do that. If we accept we're operating in maybe, then we're not looking for confirmation and we're not looking for certainty. We're looking to solve for maybe. So what is that? That is gaming. And gaming is maybe. And what is gaming? Casinos only play games that have an edge. That's maybe. Maybe they'll extract dollars from the gamblers, and maybe gamblers will extract dollars from them. The cards coming out of the deck are random, so maybe. And the gamblers play the cards randomly, so maybe. Maybe that'll work out for the house. Maybe it'll work out for the gamblers, right? So maybe. So how do the houses extract, the casinos extract the dollars from the gamblers? It's because they play maybe, and they also only play games that have a statistical edge that favor them. So maybe the gamblers win the next hand, and maybe the house wins the next hand, maybe. So if maybe is the only thing you have to solve for maybe, not trying to create certainty to avoid risk, which is our primal wiring. It is absolutely diametrically opposed. So if you're trying to create certainty, it's really based on your primal wiring to avoid risk. Fine. Works great out on the savannah with the saber-tooth tiger. Does not work here in the trading environment where we have to seek risk, not avoid it. Kind of counterintuitive, isn't it? Well, this is why the Trader Lab exists, to help you understand why the market or how the market does what it does, how you might get in alignment with it, and understand the environment that you're operating in and the psychological impediments, and also how you might get control over your fight and flight responses to the environment you're actually operating in. It is not willpower. It's something more. And you can learn this in Trader Lab. And you're all invited. There's no cost. There's a link in the bottom of YouTube if you have not been to Trader Lab. And there's a library of webinars, a terrific community of serious traders that have come together to leverage their collective experience, and of course, library of not only webinars, the community, but PDFs of structured trades, and a lot of previous streams I've done that are in that library. And many of you ask me for real-time narration. I get it. I love to do it. Yesterday, I spent a lot of time in real-time narration, yesterday's stream, and if somebody can post that in YouTube, maybe put a little description of what it was. It was the day after the POTUS put a 90-day halt, if you will, and created a huge short squeeze. So it was the day after that, very interesting day. And there were a lot of structured trades and a lot of rationale for it. That's all explained yesterday. If Dan or Stephen, if you could post that in YouTube for our visitors. Guys, save the link. If you're in YouTube, watch it over the weekend. You'll see real-time narration. If you come to the Trader Lab, there's also the library of webinars, and there's real-time narration streams in there, 4 to 5 hours long. If you sit down with the cocktail, which you might need, you'll see me go through real-time narration with many, many, many trades in different configurations. So you can see it there, or you can watch it here when I have time. General disclosure, all Bookmap Limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice or recommendations. Risk disclosure, trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Please grab a pen and paper. I'm going to give you a couple statistics. Past performance is never indicative of future results. You got to vet everything for yourself. Write this down. Let me get some oxygen. Okay. So we opened inside of, let's say, lower inside of yesterday's range. Can we agree on that? Yes. So here's some probabilities. These are statistics. You have to vet them for yourselves. Grab your pen and paper. And nothing is built. You have to understand, statistics are not primary inputs. They are aligned inputs. So if we have statistical probabilities, we can gear ourselves at times when the context suggests we're heading in a specific direction of getting somewhere. That's all it is. However, since the market is random, remember, maybe in the top of the stream, what do we have? Maybe. Maybe it'll do this, maybe it'll do that, maybe it won't do any of that. Who knows, right? I'm not concerned with predicting. I'm concerned with alignment. So maybe some of these statistics will come into play, and maybe the market will do the exact opposite thing, and maybe they don't mean anything because there's no 100% statistic. So let's look at the statistics. There's over a 97% probability that will take out either the first hour's high or low. That's called the IB. There is about a 93% probability we'll take out either the ETH high or low. There's approximately an 85% probability we'll take out yesterday's high or low. And there's an 83% probability we'll get to the ETH volume point of control. There's approximately a 72% probability we'll get to yesterday's settlement, and there's about a 70% probability we'll get to yesterday's point of control. There is a 69% probability we'll take out the first hour's high, and a 49% probability we'll take out the ETH high. Anyway, there's more. But those are only statistics. Now let's get into the, as they say, the nitty-gritty. By the way, this is what the structured trades look like. There's 60 PDFs. They're available to all of you. So when you see me talking about structured trades, there are these or derivatives of these. These are broad strokes. This is not plug and play. Doesn't work that way. If it was plug and play, we'd all get plug and play and sit in our Barca loungers and sip a cocktail and just go down to the ATM in the basement. Wouldn't it be nice? That's fantasy. Now let's get back to reality. This is yesterday's RTH. This is important. Let's talk about this. This is a consolidation. And if you remember, on this day, we were looking for this continuation down because tariffs not so good. Now, we had POTUS come out and say a 90-day, halt on the tariffs. This 53.14 was where the gap was, and the stops were sitting out over this consolidation. The news came out, and then we ripped out the shorts, filled the gap. And here's what's important. Now, this orange line is what's called the microcomposite volume point of control. Don't worry about the language. This is a microcomposite. It's just intermediate time frame. This was too high. Now, the day of the squeezeteria, where all the bodies were thrown under the bus, we came up here. Now, here's what's important. The ETH high for yesterday was just a few ticks above this high and right about here. So too high. If that becomes too high, and then yesterday in the ETH, I sell off, and yesterday in here, it was shorts only. And that's all why I suggest you watch yesterday's stream. Plus, there's a lot of real-time narration in that one, which I know you guys like. So you can see it unfold. This is support. So yesterday I had one long. So it was short, 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 short. One long against here for the possibility that we were going to hold the test after you test a breakout and then continue back up. Market failed and we came back inside. That set me up shorts only, and this is all yesterday, and you can see it in the stream yesterday, which is why I hope that link gets posted. And I can't look up and see your questions yet. This is the target. And again, targets are just suggestions. There's nothing more than what? Maybe. So here is an inside day. And yesterday at the top of the stream, I says, well, we can either test yesterday's high, and this is before the ETH or anything looking at it, or we're going to have an inside day. Inside day means two sides are active. Okay, it's called balance. So when you have this kind of thing, and you'll notice where we closed yesterday is right around the inside this breakout, right in here. So it's really on the edge of the universe. But I have an 85% probability to take out either the high or the low. My inclination is that we can very easily take these shorts out that are in here and then just rotate. So I have no opinions. You know, I have inclinations, and my inclination is to be selling it because of that, because that's where the retail price is in the intermediate time frame. So if I break out and I find too high, possibility is to come down and check too low. Now, the next thing I do is I take yesterday and the day before, the tariff pause day, and I put them together into a composite. So I have an outside edge here, I have an outside edge here, and remember, too high, too high. So I am still theoretically looking for preference to the short side, but as a day trader, I trade both sides. Does that make sense? And if you have questions, please post them. Yeah, thank you for posting that. How we doing, guys? We all right? Okay, hold on a second. I see Discord stream fell on its head. Let me see what's going on with that, guys. Hold on one second, guys. I'm trying to fix something up a little bit here. Okay, let's see if Discord comes back. Let me know if it's percolating. Is it live now, guys? Okay, thanks, everybody. Sorry about that. I have no idea why. Sometimes you just have to, you know, the old black and white TVs, you have to smack it on the side. Try that with your laptop. See how that plays. So this is right when we opened. So 5302 is the retail price from yesterday and the highest volume between these 2 days. So think of this like the current retail price. So and since we're opening here, we can slosh around it. That's called balance. This is what this is. This is a two-sided day. Inside day is both sides active. That's why it was rotational, but with a downward skew. And this is too low at the moment. This is too high. And this is the current retail price. So today's auction, we can take out the shorts. And remember how the market tends to work. The market tends to go up to go down. It goes down to go up. It goes up to go down. It goes down to go up. It goes up to go down. And it goes down to, we'll find out. Is everybody tracking? Now, that's high time frame. Up. Now, must have some volatility going on here. Let me see. One moment. Okay, this is the RTH open. Now, what this is the 5302, that higher time frame in the micro composite I was just showing you, retail in the last 2-day distribution. This is yesterday's retail price, the highest volume from yesterday's RTH, the inside day. This is considered the fair price. The nature of the market is to try to find out, and let's remember why we even have a market. What's too high? What's too low? Retail. What's retail? You go to, this is shopping. Trading is shopping. That's all it is. And it does it in all time frames or fractals, if you want to think about it. So even in a little microstructure, there's a buyers and sellers, right? So if the sellers are here and the buyers are here and one side takes over, we're going to move in that direction. So what's too high? What's too low? Well, in all time frames or fractals, it's the same exact thing. What's too high? What's too low? What's fair? So the market rotates to try to figure out in all time frames and fractals what's too high, what's too low. And it's going to do this price discovery process or valuation process. And that's what creates our rotations. And also as day traders, we're trying to get aligned with. And in the Trader Lab, it's about trade plans and alignment. So if we think, so we open lower, and I post all this in Trader Lab pre-market. Maybe I'll show some of that later. Not important. And I'm saying is, here's my, and I always stress, it's me, not you, me. Because we all operate in our own time frame or fractals. I like to trade for larger rotations because I like to get paid, just me, and I take stops just like you. So if I'm going to take a stop, which I do, trying to probe for position, when I get on the position, I'm trying to get paid for it and like any business, cover my expenses, which in the business of trading is, besides your fixed costs, losses, stops, Casinos pay to gamblers, right? So they expect to pay to gamblers, and they also, if they play their games in a disciplined fashion, they don't make them up. They just deal the next hand because they're playing an edge. That's what our structured trades are over time. If we do our job, and as humans, we have to manage that issue, we extract the dollars from the other players. We just don't know when, where, how. It's all random, same as the casinos. Remember that. So the idea is, if this is too high, then I want to sell it to come back here. It's called mean reversion. So what I'm thinking is, what's too high, and this is the retail price from yesterday, and what's too low? Wish I knew. Let's look. And I posted these in Trader Lab. I don't call trades. You don't need to take my stops. I take them. Very proud of it. If I don't take a stop, it means I'm not following my plan. That's a good reason to take myself behind the garage with a broomstick or a rake and stand on it a few times. So right here, liquidity is in the book. Now I'm going to show you more advanced concepts. I've been doing that lately. There's much more to Trader Lab and what you can learn, but you have to start somewhere. And it doesn't matter how long you've been trading. It doesn't matter, because it's not about, gee, I've been trading so long. Lots of that has to do, if we trade a long time and we're doing the same processes, but we're getting the same results, it's not persistence anymore. It's your process, and possibly you're not aligned with the business that you're trying to be in. I always have to go over this because it's what I did. When I first started, indicators were new, 1980. Wells Wilder, very exciting. So we didn't have Orderflow, we didn't have domes, we didn't have computers, we didn't have an internet. You had a book and a seminar. And just like chat rooms today or seminars today, it's still the same. You just pay more and you don't get anything different, my experience. This is a sweep. Now, what I do, I don't use indicators, I use Orderflow. So Bookmap is a high-tier Orderflow tool, and because I understand what it says, instead of having a backward-looking price-based or derivative of price something that is backwards looking, and it's very minimally, call it unidimensional. It's not integrated. I don't use the indicators, because by the time an indicator tells me something, what is it telling me? That I'm just going to get a little rotation, or is it a reversal? How do I know? Well, I don't know what it will be, no different than your indicator. But my brain is speaking a foreign language. I had to learn the language and not depend on Google Translate or plug and play indicators that I tune and tweak to get the fit, optimization, curve fitting, and we know where that goes. Been there, done that, did it with trading systems. So I did it better and got the same result, much better. Not a different outcome, same result, much better. Sweep, liquidity. This is called VPOC migration. Now I'm going to label these. This is process. What I have found for me, if I'm in a maybe environment, 100% random, 100% of the time, what is anchored? What do the casinos do? They play games that are anchored inputs. So they're not making the games up because they're just as clueless as I am. Not you, me. I'm clueless. That means I can't predict. I am not ignorant. There's a big difference. But if you think you know what's going to happen, you're going to be myopic and not flexible to change. So one of the ways, at least for me, I know what might happen. I don't know what will happen. That's not my job. My job is alignment. So if I have a premise that if I'm under here, the retail price, and now I have my open, I have my buyers, I know I'm in a potential, and I'm in opening in a high volume area, I can anticipate rotational trading. That's what I know, and now I have to wait. So I have VPOC migration. Let's speak language together. Let's translate. Too low. New retail price. VWAP. This is lovely. Price is moving higher. Do you notice that? This is shopping. Remember, trading is shopping. Moves higher. Now, let's follow the yellow brick road. This was yesterday's retail price, and in the intermediate time frame, next time as you think of them, retail. This is an attractor. And what the market does is it likes to check prices. What about this, Lewis? Should we buy our tuna up here? Well, I don't know, Herb. It might be too high. Sweep, new retail price. Watch. Is it too high? Location, 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 location. Follow the yellow brick road. Sweep, location. Let's just see what it does. See it? So now I was visiting with one of our traders in Trader Lab this morning. We were talking about this, and I saw this. This is a short. Guess what? I can't take it. I'm not, because I have, it has to fit my personal trade plan. In other words, what's my risk, and where does my stop go, and where's my entry? Well, I can't. Where am I entering here? Because I'm a human, So right here is the location, and it breaks away. How do I get into this? Well, I need it to come back here at least with a limit order, stop over here, and then we're looking for it to come across. Okay, that's the trade. Let's see. Now there's more. Remember where my entry would be. It would be here. I can't get in there. But what do I know? If this is too high, what about this? It was too low, right? Sale, too high, test, break. I'm not paying that. Now I have my quote resistance. Now I have to find a way in. And now if I can't get short up here, which is really the place, then I have to be looking either at another location, and then this is going to be my support, and my stops are under the opening swing low. Okay? Watch. So this right here is a potential short. Migration. Resistance is here. Your stop would be here. This is your entry. These are all triggers. And where's support? There. So your scale would be there. This is a structured trade, and your opening swing low is here, and your liquidity comes in down here. I posted this, I think, in Trader Lab. I can't remember. Anyway, that's a short. Now there's another short entry here. Are you guys tracking? By the way, this is just structured trading. There's no magic in all this. It's just what it is. Recursive maintenance. Percussive. Oh, percussive maintenance. Yeah, Dan, you're going to have to tell me if that's a new trading term. How are we doing in YouTube, guys? Please give a like if you're liking this. Let me know what you're thinking. So this is now an advanced process. So first of all, this is your target. That's your scale. You get a bounce. Your trade could be over here. And here's the next one. It breaks here. These are aggressive shorts. I'm not saying anybody should take them. I'm just showing you their structure here. And you have this, comes in the book. When you have liquidity jump in the book, you want to see what happens. That's the limit order book. And it's showing, the heat map shows us what's going on in here. That's, the limit order book. The passive side, well, those are the icebergs. So they are buying. It creates this. Now, where's the other place? Let's look here. Now, there's nothing here. They're in, they're out, they're in, they're out. That's algorithmic. Break low, resistance, break low, support, break high, come up, support, break low. Now watch here. This is an advanced process, and I have to show you the structure that goes with it, so you kind of see what it's all about. Now there's more. Let me give you some other things here. Yesterday's value area low is a valid target because we are in two-sided trade. That's called balance. So value area, and it's an old market profile thing, and I don't do much with it except under certain conditions. Value area is where 70% of the volume was from yesterday. So while I'm working a trade, if I'm in remember where the main or the mean is, it's here. So I know, and yesterday's mean is there. So intermediate time frame and yesterday, this is the retail price. And how does shopping work? Well, in all fractals and time frames, we're looking for too low, come back to retail. And by the way, if this is too high, we don't have to come back to it. We can go, nah, I'm not paying that. But what I am in is two-sided trade. So I'm thinking two-sided trade, but I don't know. But my lean for me primarily is the short side, but I know it's two-sided trade. So I know that in my plan. I don't know how it's all going to manifest itself. So I haven't figured out how to predict anything, so I don't try to. But here's what I know. That's an important level. So if I'm taking shorts, I'm looking for it to come out wherever it goes. So that's my next level. And then this, ETH low. And I also can go the other way and take the ETH high. It doesn't matter. Remember, one of them has a high probability like yesterday's high low. In fact, let me see if I can value area low. Let me just try to give you a statistic. Again, it's not something. Let me find it. There's a 71% probability, past performance not indicative of future results, that we're going to get there in this condition. And the ETH low, just to give you something to chew on, we got a lot of statistics, about a 65% probability, 66. And you have to vet these for yourself. Now, it's only statistics, right? So when I'm looking at the short, I'm looking here as a target, and I just put limit orders out, and I could be looking here. If I have more runners on, I'm going for this, and then I'm managing, and I'm always managing my trade because it's all random. So let's get over it predicting anything. I think your self-talk is very important. If you say to yourself, it's going there, not the way to talk to yourself, because now you've closed off the possibilities that it might only come here, or who knows, right? On any rotation. So it might. Get used to the word maybe. Remember the top of the stream. Maybe this, maybe that, maybe. Maybe it'll rain today, maybe it won't. I don't know, right? Maybe I'll win the lottery. No, maybe I won't buy a ticket. Maybe. Right? So here's what we have. Liquidity comes in the book. This is how you use order flow. Location, clueless, right? Watch. So that's my target. VPOC migration. Now, this is important. It says this is too high. This is the new retail price. Two possibilities, off this way or back here. I know you're going, well, Tom, I don't need to listen to this. No, you don't. But let's look at what we see. I'm going to take you in order flow. Now, I have no idea, but let's look at the language of the market. This is the new retail price, okay? And as far as I know, there's no reason to think it's not going lower until it doesn't. Part of the thrill. So what do we know? This was where there were buyers. I get below, I test, I break low. This is a level to think about. Again, I'm getting into something a little advanced now. Let's just look. This is a level to think about right here. I come outside. Now, this is what this is right here. What this says, there's a sweep, and it suggests the possibility, and this shifts down. So when I have a sweep in this, when I see a sell sweep, the possibility is counter rotation. Now, the question becomes, do you exit your short here, or are you further outside? And where's outside? It's all the way up here. Because we have another trade in the Trader Lab called VWAP or mid to VPOC. So if we came out here, I'd be taking a short. This is a structured trade. In here is not. But let's talk about the condition of the market. There's two elements here. One is the higher time frame, which for me is suggesting lower, but I'm a day trader, so overall lower. However, intraday, either side, both sides, doesn't matter. Trade statistics, trade context, doesn't matter. My preference has been, as you guys know, trading the short side. I trade both sides, but I have a certain preference because of higher time, what I perceive to be the higher time frame context. And it doesn't mean that if we turn the barge around that I won't be on the long side, because as a trader, that's what I'm doing. I trade. I don't go beyond that with it. But I have an inclination. So I try to look at this and I'm saying, this is the current retail price. And I come outside, I can sell this, I can sell this. I have this behind me. It was too high. I have structure sitting here that we rejected up at that high volume node. That's resistance. I have an outside edge up here, low volume node, which says mean reversion back to here. So what I'm looking for is shorts to come back here. That's the trade. It's called mean reversion. Now, right here, if I don't have a location, I don't have a trade. I just sit here and I go, well, gee, that's interesting, because that's all I have is interesting. This is retail. So in a mean reversion trade, I can come back here. And this, I think, was, what was that? Was that news? Or no, I don't know. I don't remember. Some news came in here someplace. So this is too low. So this is the reversion, and there's another sweep. Let's look at what we have here. Liquidity is in here. It thickens up over here. No way to know. But here's what's important. You notice this? Sweep and location. Reaction. What do I get here? Sweep. Absorption. What this is absorption, absorption, reaction. Now right here, and I'm looking for a short. Remember, here or here to come back here, right? Structured trade. But where's my location? There, there, and there. Why would this be a location, you're asking? Because this was too high, and this is the current retail price. This is the auction. Now, what else is out here? This is called the low volume node, an outside edge. So it's like, I'm not paying that. Yeah, but it's on sale. And then we can come back here. Let's see. Now, no clue. Watch. This is how the auction works. Now, you're going to look at this and go, you're out of your mind. And I know, yes. And it's just trading. So right here, location. Remember, this is what's important. We rejected it. It was too high before. So I come back. I have buy stops. I have some icebergs, and I'm right at the location. Sellers take control, trigger right here, and your short is either against here or against there, either one, and your stop's going to be over the high. Your entry is there, right there. And your stop has to be up here. And if it's outside your risk parameter, then not so much. You don't trade it. And you're trying to come back here. So if you took this, here you would have a scale. So you'd be risk neutral, and your stop is 3 ticks above here. So whatever this high is, whatever. Now, I'm saying 3 ticks. You have to vet that for yourself. So let's say it's 89. So where's our high here? You would not be stopped out here, and you're going for this. Now, remember, you're going for that there. That's your target. Okay, is everybody tracking? This is mean reversion, and it is, I don't want to get to, but look, remember where we're trying to come. Buyers are here, buyers are here, VPOC migration, variable high volume node, right there, target. And I think that's okay. Now, when you're looking at this, you're probably just going, this guy is nuts. Yeah, well, no. What it is I trade what's called the auction. And this is what the market's job is, to go. And the way it works is, if you got shorts in here, who become the buyers? They do. Buy stops. If I squeeze those guys out and I get longs in here, who become the sellers? They do, when I'm in rotation. So now, if I get short, what happens to these guys? They get thrown under the bus. Then what? The sellers in here can become buyers here. So this is what creates rotations in all time frames and fractals. So what do I know? Remember, I don't know anything, but I know some things. I know the buyers are here, the buyers are here, and now the retail price is up here. If I get a short here and I come down here and it's still too low, what might happen? I'm going to come back here. That's the auction. Now, what's up here? Remember? Retail price, higher time frame. Microcomposite, yesterday's retail price. Is it too high? I don't know. What do you think? What is this? It's another short. Let's look at it. Structured trade. Now, I know I'm not in real time. Hindsight is always clear, right? But in the auction, remember the top of the stream. What is this? This is yesterday's retail price. And what are we trying to figure out? Is this too high? What about this? I don't know. What do you think? I don't know. So I come up, stops, selling icebergs. Right here, full session VWAP. I don't know if that was there at the time. I really don't remember. And now we get VPOC migration. VPOC migration, the new retail price. I'm in alignment with yesterday's retail price. I'm in alignment with the intermediate time frame, and I can easily squeeze up. No clue. Here, selling, I get a sell sweep, suggests an upside rotation. There it is. VPOC migration, right here, key moment. This is, as Dirty Harry says, do you feel lucky? Well, do you? Because right here, if I come above this, I can continue. If I reject it, I can rotate down again. Let's watch. VPOC migration, too high. New retail price, shopping. So this is what it says. Rotation, too high, break, potential short, resistance is here, and you'll take your stop like the rest does if it doesn't work. See it? These are structured trades in TraderLab. You can learn this. And I'm going to say is it's going to be different than what you've done before. Now, let's come back here. So, this is a short, this is a short, this is a short, subject to your plan and risk. You know, you have to structure these things. Now we have our mid, our VWAP, and there's always stops. I'm in two-sided trade. Remember, rotational trade. No clue. Wish I had one. Don't own one. So best I have is what? Maybe. Yeah, maybe it'll do this, maybe it'll do that, maybe I'll get stopped out, maybe I won't, maybe I'll get risk neutral, maybe I won't. This is where I was going. Okay? So and this comes in the book. Where? Location, location, location. You've heard of that. Real estate. So this, if you're taking any of these shorts, this is your why? Too low. And what does the market tend to do? What's too high? What's too low? Say too low. Well, if we find too high, we can come back and check too low. It's shopping. It's like you go to Sam's Club or Walmart and you go, wow, they're overpriced here. Let's get in a car and drive back to that other store. They had a better price. Well, doesn't mean it'll ever get there. But that's how you kind of, I think of it mentally anyway, shopping. So what you have to do in mean reversion, and I was talking to one of our traders this morning about this, is that mean reversion is a separate trade plan from a running market. I mean, there's nothing wrong with this for me. I mean, how about you? You know, you're talking about 20-point trades, $1,000, you get short over here, you're not going to get all of it. Nobody gets the top, nobody gets the bottom. And mentally, it's very difficult for us because if we're trailing, what you need to be doing in a mean reversion context, this is not the same process you do in a running trending configuration. It's actually a separate trade plan. I always talk about this in Trader Lab because the Trader Lab is about business and trading, and most of us don't know the business we're in. We think it's something else. We think it's all, let me get the right, so I have that certainty and confirmation. Here's anybody who's listening to the stream, in your mental self-talk, if you are speaking to yourself about certainty, I want to be certain, so I'm going to wait. Oh, I want confirmation. So instead of entering here, which is with order flow, that's where you would be entering. You're going to enter wherever, because of certainty. You're kind of missing the point. The point is there is no certainty ever. If you can't have certainty ever, why would you enter with certainty that does not exist and accept much more risk for the same trade? You see? So, and it's not our nature, by the way, is to look for certainty and confirmation because of our primal wiring, which is risk aversion. And believe me, we're all risk adverse. The thing about it is, in this business, you need not to be risk adverse, but risk smart. So, is it better off for me to take the same trade you're going to take and enter it here with a stop here than it is for me to look for certainty and enter it wherever, here, with a stop here? It's the same trade, except the risk is, well, which risk would you rather take? That's the only thing you get. So you actually, when there's less certainty, there's, I think, more opportunity. But you're still going to take your stops either way. So think about it. You're still going to take stops. So do you want to take them with certainty, or do you want to accept it's uncertain all the time anyway? Something for you to ponder. So when we come down here, as far as I know, we're going here. So if it's a mean reversion trade, and this is where we're trying to go, then you have to have trade management. And mean reversion is rotational, so you're not going to, we don't have any idea. Like this, fine, What's the difference between this one and this one? There is no difference. They're just rotations. And we never know where the other side will come in. There's no way for me to know. So if I can't remember how the casinos operate, they can't know either. So if they can't know, how can I do better than them? They've only been doing gaming forever, and they're really good at it. If they don't have a way to predict the outcome of any individual hand, how can I predict the outcome of any individual unique event of interaction with the other side? Can't. So why try? How about solving for you can't, as opposed to trying to get something that doesn't exist? Because we all want certainty. That's our primal need. So you're always going to be looking for something, but it doesn't align with the business. So we come outside, say la guerre, trailing stop, wherever it is, you're out. Hasta la vista. Thanks for playing. We'll send you a coupon to the buffet. So now market comes across. And this is what was too high. So let's watch. The next area is the overnight volume point of control. And this is where the breakout was in the higher time frame, 53.15. So we've been inside that micro composite. Let me see if I can find this thing for you. I just want to show you again what we're actually traversing here. This is the 53.15. So as long as we're trading down in here, I'm looking for this 50, whatever it is, 5100-ish. If we come across 5302, which is really our balance area and the highest volume from yesterday, then I'm still thinking slosh, and we have an 85% probability of taking out yesterday's high or low. Would not be surprised at all if we take out yesterday's high at all and rotate. In other words, the market's like got hit with the 2x4 over here, and then it consolidates, two-sided trade, and now we're just going to try to figure out what's going on here. What's new? What's next? I'm still overall inclined to be bearish, but I trade as a day trader, doesn't matter. So that's why the shorts early on, and then once we're coming outside of this 14 area, then I know I have these possibilities to take out yesterday's high, 85% probability, high or low. So, okay, too low. Now let's look. This is the retail price right here from the ETH. So think of it in sequentially. Retail price from yesterday. If it's fair and I find too low, then I can come out and try to find too high and come back here. It's called mean reversion. In the ETH, that's the retail price. If it's too high, I can come out and check it and come back here. So let's see what happens. Sweep says suggesting potential counter rotation. I'm above the overnight volume point of control. Let's just watch it. Notice we pull back. Where do we hold? The overnight volume point of control. This sets up a condition called mean reversion. It is now long side, outside in. And here's what sets it up. When you come outside, this is resistance because it was too high. If I break above it, and now I have my sweep, it suggests counter rotation. Where is now my area? It's there and out here. Why? The breakout level, 15, key location. I'm above these guys, which is my retail price. I'm now in a new distribution of volume. It's all it is a consolidation. Too low, too high, too low, too high. Who knows? Breakout, breakout. Retail in the ETH, and this is the current retail price here. What this is a high volume node. It's the same as that. It's the same as that. And going down in time frame or fractal, the same as those that move around during the day. So if this now is the new retail price in this auction, this is an auction, and I find too low, and that's called a low volume node, and you could look to the right, you'll see there was like hardly any volume went off over here. I'm going to label it as what's called low volume node, and this is shopping. So the way to visualize this, at least the way I do, is I go, well, there's my new retail price in this auction. It's on sale out here because the market didn't stay here. It's almost like they put your tuna on sale for 25 cents a can, and normally it goes for $1. It doesn't stay on sale. It comes down here, you throw 20 in the cart, and there's no more sellers. Now the price comes back to retail. Okay, that's the auction. So if the auction with the sweep, which suggests counter rotation, if I come outside to where the buyers took control and we came out of here, now I know where my buyers took over and the outside edge is out in here. That's the low volume node. So if I come outside, then these rotations, I can look to buy it. The other thing is, this is here from the ETH, which was the retail price. I'm above it. Support, support, long. If it's in your plan, this is called mean reversion. So at the moment, the trend is up at the moment, and I'm trading longs. So that's called mean reversion. The way the trade works is you would come back, you would look here where the buyers broke out and took control. That is what creates the low volume, the acceleration. And then we can come back and test it. So down in, in here, some out here. So then it's order flow. See, the buyers come back in. Now, here's the thing about this. If you don't have a structured trade for this, you don't have a trade. You're just narrating it. You can develop trades. And the other part is you might not get a trigger that you vetted that fits. So this might not be your trade. Just saying. And then your objective is to go higher. Let's watch it. VPOC migration. This is the new retail price. Now, this is interesting. Let's see what it says. Language. New retail price. What's too low? What might be too high? And there's my liquidity. And there's more. If I'm over this and I'm over this, I can do what's called mean reversion. And I'm trying to come out the top. And remember, 85% probability to over 90% probability to get either the ETH high or low, and 85%, I should say, to get yesterday's high. And this also is a target. So these are targets up above. So if you're now on the long side, you're headed for this. If you're not on the long side, you're trading rotation. It doesn't matter. So this is your outside in. This is your VPOC migration. This says the new retail price. How do we trade this? Outside in. Probabilities favored the upside, maybe. So let's see what it does. Let's watch. Outside. Absorption. Where are you trying to go? Back here. See? This is called mean reversion. So you're leaning against this. And there's your entry. Here's your trigger. Here's your entry. Here's your scale. And you're looking to come out the top. And then it's trade management, right? I don't know where we are, but where are we? Sweep. Trade management opportunity right here. Let's look at this. So this is advanced processes. I'm not saying anybody should trade this, but you can learn to trade it, but it's more advanced. The thing you need to understand first is what is the condition of the market? What are we in? Rotational trade. So this is called mean reversion. Now, the idea is possibly and statistically either yesterday's high or low, and remember what the targeting is. This, maybe, So remember, I always get asked about statistics. I'm going to say is as long as I'm trading the long side, yeah, I'm working those statistics. If we fall out of this distribution, then those go on the back burner and I'm trading reversion back to this. It's one or the other. I don't know. It's not my job. This is the current retail price. So it's outside it. So this, remember, your trade plan is for rotational trading, not giddy up and we're on a trend and it's a bullet train. And you just put a helmet on and a flak jacket and you hope for the best. No, this is rotational trading, different plan. Liquidity comes in the book. Selling icebergs, buy stops, sweep here. This all says counter rotation if you're reading order flow. Absorption, break, liquidity, stacking liquidity, selling icebergs, buy sweep. This is a trigger. Now, here's what do you do with a trigger? Great question. It's up to your plan. You exit because you're trading rotations, or you just have a stop way outside and you're willing to give back whatever it is you have. That's all trade plan, and the decisions are made before you ever step into the market. You know what you will do before. The thing that's difficult, of course, in this is if you can't predict this, any rotation, because they're all random, then your answer to randomness has to be structure or rules that are vetted. Because in a random environment, why we might have only gotten this and then it fails. Why didn't it fail? It's random. So if you can answer the question of why with maybe, then you don't, your plan cannot be maybe. The market is maybe. Let's go back to the casino analogy. They play the games exactly the same way. Well, we have to play our game the same way because the rotations are random. So we can't solve for randomness because some days, you're going to get out here and then it goes up 40 points and you're going to, be crazy. And other days you're going to get out here and you're going to think you're walking on water. You see, that's randomness. So the better thing to do is, in my opinion, is you cannot respond to your attachment. You need to learn to become detached from any individual outcome and walk into the business every day, open the shop, and just follow the process that nets you the yield over time. Because that's how casinos make their dough. Because they're not changing the game. They're just doing the same thing. They're not attached. So they don't go, gee, I could have had 15 points and I only got 3 points out of it. Next time you do the same process, you get 40 points. Next time you get the same process, you scratch or you take a full stop. What's the difference? How about this? Maybe. That's the difference. It's always maybe. This is too high. This is the outside edge. This is the low volume node. This is the sweep. This is support. This is resistance. See it? How do you deal with this? It's a great question. How about this? Trade plan. Where do we come back? Sweep. You see something familiar? Sweep. What's too high? This. Do I have any clue? Nope. Wish I did. Don't. Can't. Sellers are here. Sellers are here. Let me give you some ideas about this. And then I'm going to look up your questions. Thanks for your patience. I can't see them while I'm looking over here. Separate computers, separate screens. This is the buy sweep. This is the liquidity. I got liquidity up here. I have no idea. Sellers are here. There's a sell sweep. What does that suggest? Rotation up. Where's my resistance? What happened here? Let's use some common sense. If I have a delta buyers, which are aggressors, and what is delta? Just quick delta 101. Delta's aggressors, but not buyers necessarily that are initiating. Buy stops become market orders. They show up as delta. A market order is an aggressor. All right. Wow, I got buyers here. Yeah, but I got sellers on the other side. You see them? The icebergs. So what's happening is these icebergs are taking on these sellers. So they're absorbing the buyers. You see how absorption is? So now you can put it together. Why? Liquidity, sweep. What does that suggest? Hasta la vista. See you next time. Maybe. And I have my liquidity. There's my buyers. Absorption, break. This is a potential short, and you're trying to go here. Okay? Mean reversion. And then out the bottom. You come back around. Trade management. Remember, we're trading rotations. Nasty, nasty thing. Where's resistance? It's up here. Now let's come a little further. Where did the buyers fail? There. There. Where do I come back? Notice. There. Where's the liquidity come in? Where's a sweep? I got a sweep there, and I got a sweep over here. Sellers are below the buyers. Sellers are below the buyers. See, the buyers are getting, thanks for playing, we'll see you later. And now the stops are going to be at mid and VWAP. And what else? Retail. I don't know where we are. Where are we? Is that the news? I think this was news, wasn't it? Wasn't that when the Fed speaker was speaking, guys? Was it? Are you guys with me? How we doing in YouTube? Please give a like. Feel free to view these streams. Um, Today's rotational trade. You need to know the condition of the market and operate as they say accordingly. So what is this? Sellers were here. Sweep, trigger, pullback, potential mean reversion. This is called mean reversion. It's outside in, outside in. So it'll drive you nuts, and it's specific trade plan. So now for me, if I get this right here, I'm going to look at this. So right here, I'm looking at a potential trigger. My buyers are here. Now I have a sweep, and I have a trigger here. And now I have to wait for retracements when I'm out in space like this. Now let me show you another little idea. This is where the sweep is and the auction is right here. Let me just draw a little box. This is just microstructure. And depending on what's going on, I don't like to do a lot of this, but I want you to see how you can see the auction from another angle. So order flow is what's going on in here. So these are order flow tools. But let's say we're looking at the result of the order flow. There's the volume. It's right there, that node. This is your auction. Too high, too low, too high, too low, new retail price. This is you Saturday night going to the neighborhood store down the street for your $8 pint of ice cream. There's two other people in the store, but it's pretty empty. So there's not a lot of demand for ice cream at $8, but there's some. Well, after you guys buy your $8 pint of ice cream, they run out of buyers. Where might they come? Well, the market might come back here to the retail price in the other store, the regular store. So if I break away from it and I come back and check it and it's still too high, this is a structured entry for a return here. Okay? That's a structured trade. You can learn that. And I'm not saying you should do it. I'm just saying you can learn it. Now, let me take this a little further. You may find this interesting. Watch. I'm not paying that. Ethel, get in the car. Let's go. Test. Short, stop here. And then you're looking to get rest neutral, and this is mean reversion. It is, remember, a specific plan for the condition of the market. This is your primary target right here. And then maybe out the bottom. That's part of the joy of not knowing anything. Watch. Where's our resistance? It's here. So if I get short here, that's my primary target. If I get a counter rotation, I can be out of this thing. This is the primary trade. Or if I come up here, this is my resistance. I have another trigger here. If my plan calls for it, I can take another short back to here. They're all the same. It's outside in rotational trading. It will make you nutty, but the fact is that it's just a context. And if you can recognize it, you can operate it. Now, where are we trying to go? Variable high volume node was down here. It was too low. Current retail price is here. Liquidity comes in the book. Sellers, sellers, sellers. Right here is a potential target. They pull and they raise. This is a key location. Let's just see what it does. I have no idea. Not my job. Okay, sweep. This is now resistance. Let's see what happens if we come back. No way to know. And remember, imbalance, this is the target. Yesterday's value area low. And let me give you the statistic. That's why I ask you to write these things down. Now look at the randomness of this thing. I mean, can you see why predicting maybe is not something to put your energy into? I'm trying to look for the stat on this. I lost it again. Hold on. 71% probability based on statistics, past performance, not indicative of future results. And the fact that it's 71% doesn't mean it'll get there, doesn't mean anything. It's just, and this was really what I was looking at for this, right here. And I get my sweep. So this is resist, but they pulled. You see, they didn't interact. So when they pull, I'm going, well, that's interesting. and I have my variable high volume node, and I have this, and I have more. ETH low. So as far as I'm concerned, I'm looking for this, but I could be done with it there, and I'm always managing my runner. And I primarily trade the target. So you could be short from up there, get taken out, put it back on over here, if that's your plan, and go down. Okay? So those are the shorts. Break low, sweep, warning Will Robinson moment right here, right? Sweeps. What do we think about sweeps? If I get a sweep, I might get a counter rotation. So right here, the sweep, if I come across here, the trade potentially might be in trouble right here. And it's a variable high volume node, which is, you guys know, I use as targets. So we get our counter rotation. This is an important level right here. There's the value area low. Okay. There's the liquidity. Now for me, I don't buy, because I'm kind of leaning one side. I tend to trade from one side. Doesn't mean anything. Because if for me to change, the condition has to change. I'm going to jump into real time here now. I don't know what's going on, so I'm going to reorient myself for a moment and just see what's going on. Resistance is there. We took out the IB high. Okay, so this is suggesting this. Okay, so I don't have anything I can do here at the moment, but we'll keep an eye on it together because I want to see your questions if you have them. This is a process, and the idea, at least for me, it's not to try to predict what's going to happen. It's just to get an alignment. And if I get out of alignment, I'll take a stop. Fine. Or if it moves away and I don't have a way to trade it because I don't have an edge in under certain conditions, then I don't have a trade. Everybody does their own thing. There's not about, gee, you could have bought the low, you could have sold the high. So, no, not my thing, because I can't. So I don't try. I just try to get an alignment. So in spite of it all, this is your resistance. You see it? Now we have another trade in the Trader Lab. I don't know if we actually, I have to look at this, see if it set up or not. It's called the IB continuation trade. It's a structured trade, one of those that are in the 60 PDFs I share. And it's a continuation trade. And the way it works is, this is the IB, okay? So this is the first hour's high, and there's over a 90% probability we take out either the first hour's high or low. And we also know that we had an inside day. We are above the breakout, which was key, which I showed you in the higher time frame, and we're above yesterday's retail price in the intermediate time frame, 2-day retail price. So maybe this is fair, and I'm above the ETH VPOC, then I'm looking to squeeze. Possibly get these guys, get the ETH high and get to yesterday's high. And the other target above is this. So this is where we're trying to go. Now, how do you get on this thing? Lovely question. And there's no, and by the way, past performance not indicative of future results. It doesn't have to do anything. So we're not in the prediction business. Remember, we're in the alignment business. Now, so when we come up here, you'd be looking for a long. Liquidity comes in the book here. Okay. Now, the idea of this is to squeeze and get the stops out over yesterday's high and get to that naked VPOC. Liquidity comes in here at the IB. So for me, it's longs only, not a recommendation. And the idea of this is to come outside somewhere, and this is part of the thrill. I have to look at these nodes out here. And this is very sloppy trade. This is difficult to trade. I can tell you I might not bother with it just because there's not a good structure. I have a sweep here. I had a sweep here. So I have support here. I have support there because the buyers took over. You see this? So it's right there. So I'll show you this. Now, this is very nuanced. So this is not really what I don't think this is not a place to start. Um, in my opinion, the place to start with the structured trades, those 60 PDFs. And there's that link in the bottom of YouTube because you got to start somewhere and you really got to build it from the ground up. If you don't understand market mechanics, and most of us don't because we're always relying on indicators to do the work, which is fine. But if you want to speak the language of the market, you're going to have to change what you do and maybe not be constrained by indicators that are conflicted, but also have winning. You know, the problem was with everything I did with systems and even indicators, they all had winning trades. That's not the issue at all. It's you'll know really what the issue is. It's strictly more winning trades than losing trades, right? Very obvious. But when we're using indicators, we're trying to fix the indicators, but the indicators are not context sensitive. If you're in a rotational trade, it's not the same as a bullet train. So most of us curve fit for the big moves. We don't, but our indicators cannot differentiate between chop and rotational trade and trending trades and continuations. So you'll do really good on certain day types. On the other days, you're going to just give it all back or go in the hole and hit loss limits. Have you ever asked yourself why? It's because your process is not broken into different plans for different conditions that change during the day. So let's look at we're looking for a long continuation trade. So this is resistance. There it is. This is support out here, out here. And it's support because of what happened here. And then you got this down here. So you got the sequence. Okay. So let's just look at this and see what happens here. Sweep. Location. Retail price. This is also a location. But what do we know? I'm above this. I'm above the current retail price. I had buyers here. They got absorbed over here. The sellers got absorbed. I broke high. I see the buyers. And my last place is here. And I have no idea. And this is very sloppy. Okay. I'm above my breakout. Remember, 53.14. I'm above here and I don't know. Except I have a statistic that has over 90% probability and I have stops sitting above me. I need to get long. And we're going for this. Now let's see if there's a way into this thing. The IB continuation trade, the way I think about these things is if I think the market's going to squeeze, which is part of the synopsis for today of the possibility, 85% probability to take out the previous day's high or low, and I'm back outside of the consolidation, then what I need to be thinking about is the stops that are sitting here. So down first, now up, now we're looking for this. And all I think we may be doing is we're going to do one of these deals after we get the shorts out. Remember what the market does. The market goes down, go up, market goes up to go down, the market goes down, and we don't know down, whatever, to go up, the market goes up to wherever. It might take this out, no clue, not my job to go down. If I don't get above here, then we're going to do this and maybe eventually continue south. Don't know, not my job. But that's kind of where this all comes from. So now what we want to do is now let's look at this. This is resistance. It is in alignment with my IB high probability. This is a potential long. It's a mean reversion trade. If you don't have a long here, then you don't have a trade. Let's see where the next one might be. Break through this liquidity. If we pull back here, it is a long. Let's see. And it might not, and you don't have a trade. Just the way it is. Let's see it. Break through the liquidity. Buy, sweep, suggests counter rotation. This is your area to enter. This is your micro support, and this is your outside edge. So this is very aggressive. But remember why you might do it. First of all, it's a structured trade, so it's a continuation trade, and you got statistics and stops. That's why you would take this trade if you can. Notice the liquidity. So if this is vetted, this is a long right here. This is a long entry. This is a long entry. All these are longs in TraderLab. It's kind of advanced because you have to understand order flow and using the limit order book. And it's a structured trade. Next liquidity is here. Your job is to get scaled, risk neutral, and then you're going for the stops. That's just the trade. It's just one. This right here is a target. Got over 90% probability. Then you're going for that and that. So these are the targets on the trade. Doesn't mean it'll ever get there. It's life in the fast lane. Now, trade management, different conversation. You can just be taking pieces, or you're further back under here and you're just sitting working on your crochet because what's above here? Stops. And what was the retail price from the tariff pause day? There. So what does the market tend to do in all fractals and time frames? What's too high? What's too low? What's just right? That was too high. So what does the market do? Tends to come back and check it. Where's the stops over yesterday's high? So this is why these are targets. Not a recommendation. I'm now current. Hope you guys are doing okay. Do you have questions? T is asking me, what was that? The session we were already trading above these levels, but I was looking for mean reversion. Well, we were still rotational. So as long as we were below testing levels and coming back in, and we were under the IB and all the way down below, no, for me, it was primarily shorts until, because we were below this. So everything was, and we were below these levels. Yeah, we would test them, but it was still all shorts. My primary thesis is primarily shorts, but in the intermediate time frame. But so I lean more to the short side. But statistically, based on yesterday's behavior with the tail on the bottom, I'm thinking eventually we're going to squeeze because we have these open targets right here. So the fact that the stops are here, the market tends to go up to go down. So I'm okay with this. I'm just trading it, I try to align. So I don't know how, if, or when. And I just wait for my trades. I have to define context and I have to continually narrate it because it's going to continually change. This is a high statistical probability. And you notice where the liquidity is now stacking next target. And it doesn't have to get there. So this sets up. Now, again, if these aren't your trades, then you just sit here and watch it. There's no trade. It might not be my trade. But I know what happened here. If I know that this was absorbed and see the buyer there, if I come back here, kind of the way I think about it is if I had a buyer here that was aggressive, if I come back to that price, might those buyers then go, yeah, I want some more. If they are still there and I get the sweep, same as that, and I get my trigger, I can take a long here and I'm going for that because of the statistics and then out the top, maybe. And then it's just trade management. If I get taken out, then the trade's over. It doesn't matter. Absolutely doesn't matter because I can't predict it. I think I'm answering your question about context. I think. Yeah. Here's the other piece. This. I'm over this. I think. I don't remember where. I can't because I have to go back and look. But I believe. See where we came out here? This is too low. This is suggesting this is too low. All of it changes. This is the last shot on goal right here. Down to here, which is this outside edge in alignment with that. And we're above the breakout of that consolidation. This has alignment. So this is where, at this point, if you took a short here, you got to get under here to get back here. If you don't, and at this point, you're above all this, that suggests to me if we can't fall back in, then we're going the other way. And then the high, yesterday's high, and the stops, and the naked volume point of control are kind of what's on the hip parade, ETH high, that kind of thing. I don't know if that answers your question. Ben, as a developing trader, I suggest traders kind of get on one side primarily. So a very broad definition of direction or context. When it changes, so it's not scalpy. Developing traders won't have it. Let me put it this way: have an extremely low probability of surviving if they think this is just sell this, buy this. It's one or the other. So let's say we are doing longs and then we see a sell. It's an exit. It's not a short unless it's in your plan. For me, I tend to get on one side and try to go with the current dominant side. The current dominant side is long, so I won't take shorts yet. I will take them later, higher, if I have a reason to. But at the moment, I don't need to take shorts. What I'm doing here, I'd be taking only longs. And then when I see a short, I don't reverse unless it's at a location. Then I just am using trade management, and I'll get taken out. And I have the same emotional response you do. But you know what professional traders do? They are not attached. They just accept it. They go, okay, ring the register, go on to the next trade. Where's my next trade? Oh, I don't have one. I sit here and wait. Or if your plan, see, the thing about plan is it's all done outside. It's not here. We don't go, what should I do now? You know where the answer is? It's in your plan. If you have to ask the question, then you don't have a plan because then you're making it up as you go. I assure you, the casinos don't change the game, or the dealer doesn't have to ask themselves, how many cards should I deal? Because then they don't have an edge. They're gambling with the gamblers. So this is about consistency and trader development. But I always suggest if a trader can't trade from a dominant side, once it's recognized, they have no business trading two sides because they're just going to blow themselves up. It's difficult enough to develop the discipline to wait for trades that have an edge and not be triggered by emotional stimuli. If we can't manage that from one side, it just compounds it if you're trying to trade from both sides, and then you become a video game player, not a business person. And believe me, the people who sit at the one-arm bandits, they're gamblers. Okay, so they leave their dollars in the casino, and even though occasionally they win a pot, right? But over time, those dollars are being left. So that's the business we're in. So trade one side as a developing trader. It's almost like learning to ride a bike. If you want to become a racer, race bikes, or motorcycles, think about what it's like, or even driving a car. When you first started learning to drive, how did you drive versus how you drive today? Today, you have unconscious competence. You understand it. You feel it. You can multitask. Your subconscious brain is doing the work. It knows what to do. This is the same. So you don't start out as a Formula One driver, and we don't start out as Formula One traders. We have to start out in a go-kart or something, or a bicycle, to get the mechanics and the balance, and then add to it, and then go faster. And whatever it is we're going to do, develop the competence. Takes a lot of intentional practice and replays and screen time. So that's why, to help traders develop these skills, it's about structured trades. So you know what you'll do. So this is kind of like a pilot. Here's what I do. I do this, I make this, I that, put the flaps here, do that, check to make that the engine's turned on, whatever it is, and off you go. You follow whatever it is you're doing. Adjust your altimeter, boom, boom, boom. Well, here it's the same thing. What am I supposed to do? What's my job? Do I have a checklist? Do I have my sense of my statistics, what my probabilities are? What's the condition of the market? And what's going on? Well, we're in rotational trade. So you're trading rotations, a specific plan. But what else do you know? Since we're integrating in multiple time frames, if you will, or fractals, we also know stops are sitting there, and that this is the retail price from the tariff delay day, and that this is possible. In fact, yesterday, on the long side early, we were thinking about this, right? Didn't do it. That was a target yesterday. Well, it's still a target today. Fine. Final questions, guys. I got 3 minutes. And remember, these streams are available to everyone at no cost in the Bookmap Discord Trader Lab community, as well as a library of webinars, 60 PDFs of structured trades you can download. Let me just give you a quick peek on what those things look like. So, this is what I'm discussing here. And this is a broad strokes. There's no cost for this. These are actual trades with some, explanations of what I'm doing and why. And the real deal here is that you take one and you isolate it. This is order flow. These are the actual trades, and these are screenshots, actual trades, and it's not because of anything, but traders are saying, what are you doing? And I said, well, it's not complicated. This is what I'm doing. It's just random. So everybody's looking for certainty, and we're all trying to solve for something that doesn't exist in this business. So not so much. But this is what the community looks like. There's a link in the bottom of YouTube if you want to visit the Bookmap Discord Trader Lab community. You can ask questions. I do a lot of posting. There's a lot of charts and stuff going on, interaction, traders posting their trades, asking questions, showing what they're doing, just a lot of good stuff. I do a lot of posting when I can. I also trade full time, so, kind of multitasking. So this is what the Trader Lab is. You can use the link in the bottom in YouTube. And by the way, here's what the library of webinars looks like. Thank you to Ned, who curates this for us. Start here. This is a primer webinar. It's that I did is about an hour. Give you a high-level overview. It's got 32,000 views. Watch this one. This is a day. In other words, the plan, seeing it, doing it, and you could see it there. Then watch why most retail traders using indicators fail, and then watch Trapped in Trader Groundhog Day. That's when you're curve fitting, trying to solve and create certainty, but you keep waking up in the same place, in spite of winning trades, because anybody can have a winning trade. That doesn't solve our problem. So please give a like. Appreciate you supporting the channel. Visit the Trader Lab. There's no cost. And if you're interested in the business of trading, visit the Trader Lab community. I think you'll find it refreshing and potentially quite different than what maybe you've experienced in the past. Please give a like on the way out. Have a super weekend. Be sure to review this stream and also yesterday's stream. There's a link posted in YouTube. Grab that link. Watch it. There's a lot of real-time narration in yesterday's. Hope you got something from this, guys. Don't forget to like. See you next week. Trade safe.